let's talk about insurance. And our guest is Ezekiel Macharia. He is the MD and Chief Actuary at an organization called Kenbright. He'll tell us all about it. Ezekiel, good morning.
Good morning, Eric.
Good to have you in the show.
Thank you.
Welcome to the hot seat of the Situation Room.
Yes, thanks. My name is Ezekiel Macharia. I'm an actuary, and I work for a company called Kenbright. We do insurance brokerage, actuarial consulting, and also health admin. So my work is on a day-to-day is designing products as an actuary, but also help the insurance companies distribute those products.
Okay. Sawa. So we'll understand Kenbright shortly. Yeah. Let's understand actuaries.
Yeah.
Apart from being the guys who score A's in high school, what else are actuaries?
So apart from scoring A's, the actuary is supposed to predict the future for the insurer. Because Eric comes to the insurer and says, I want to insure my life from healthcare risks like cancer, and the rest.
Mm-hmm.
I want to insure my car in case it gets hit. I want to buy a life policy in case of demise. I want my child to have some money.
Mm.
So my work is to look at the trends, look at the market, look historically, and come up with a number. So when they give you that number, 20,000, that's the number we've come up with based on the stats. Then what we do is then we track that number, and we track whether with 20K was right. And then if it was right, great. If it was wrong, we adjust the price.
What do you use to track and know whether it's right or wrong?
Data analytics. We have a team of data analytics people who track data. So collection of data is very critical for us.
The discipline of actuary, when you're saying that you're predicting
statistical models.
It's statistical models.
Yes.
You're looking at this and then you say the possibility of it going south or it going north.
Yes.
Based on X factor.
Based on X factor.
Yes. It's really statistical models, but let me simplify it.
Damify it.
Let me dumb it down.
Yes.
So let me give you a simple question. How many people do you think right now in Kenyatta Hospital? Do you think there's at least one person in Kenyatta Hospital?
Yes.
Just one at least.
Yes.
Are you sure?
Yes, I'm sure. I think
Would you put your hand and cut it right now, knowing that I'm sure there is somebody at Kenyatta Hospital?
I am sure that I think.
Now that you know,
I am sure that I think. The question is, do I think? I'm answering the question. I'm sure that I think there's one person at KNH right now.
So the question is this: what's the person's name?
I have no clue.
So that's really that's the magic.
Okay.
Is that we're able to know that there's going to be somebody at Kenyatta Hospital, but you don't know that person's name.
Okay.
And that's how you expand those trends. You're able to know how many accidents will happen, but you don't know which car will have the accident. So that's really how those statistical models work. It's called law of large numbers. Yeah, and other distributions.
So then that means you're playing in the sectors where you're guaranteed to have large numbers.
Yes, insurance requires large numbers. That's critical. And that's where you hear things like we need critical mass.
Yep.
Yes.
And yet, with all that thing of insurance requires large numbers, in a population of 48 million Kenyans, how many are insured?
In terms of population, people, it's about 15%. I know everybody talks about insurance penetration. Insurance penetration actually means how much money is in the insurance sector compared to the GDP. Yeah, so that's about 2.5%. It can never be 100%. Otherwise, there are no other sectors,
right.
Hospitality, construction. So the deal number is about 7% for insurance penetration. But in terms of lives covered, insurance is about 15%.
15%.
Oh, yeah, 1.5. About 6 million lives, 7 million lives.
And the insurance sector has been in this country for how many years again?
Yeah, many years.
All right.
Yeah.
Now, with the law of large numbers, why is it that it hasn't reached, a higher percentage, 30%, 40%, 50, 60% of Kenya's population being insured?
I think the biggest risk issue has been here is that the distribution system has not been able to provide those products at the right price. And we were talking earlier, the example where an insurance company gives you a product, but because they were trying to target a certain price, they remove some benefits. But the consumer doesn't know that. So they get very angry and say, I didn't know. For example, there's something called excess in insurance. Okay, one thing insurance companies have, they have very hard words, like excess, which should just mean small claims, Like small claims are not paid by the insurer up to maybe a certain number.
Yeah.
So, but the consumer doesn't know about this. So you get hit by a boat down the road and then you say
Excess.
insure my car, and you're told excess. And they're like, what is that?
So
You know?
what's wrong with telling the consumer, who essentially is going to keep your boat floating, about the truth of the situation? Because that's what we're dealing with right now. I can understand that you say you want to hide the words in the whole legalese of the situation, but the person who is essentially paying the premiums, right, should then know the real situation, don't you think?
Yeah, and you see, it's a broken telephone thing. So the actuaries, the guys who are designing these products, have all those things nicely set out, policy wordings, but then somebody comes and say, you know what, we need to fit this in one form. And, it gets compressed. Some words get into fine print level.
Lost in translation.
And then at some point, people stop reading some of those things. And then, culture enters. And the risk we have with insurance is that a bit of it is mandatory. It's not like buying bread where, you don't have to buy it.
Yeah.
But insurance is mandatory. Some aspects of it.
Yes.
Let me give you an example. Like motor insurance, the third-party risk, where if you hit a guy on the road, that's mandatory. However, the comprehensive side, which is you insuring your own car, that's not mandatory. But because there are components which are mandatory, consumers tend to just assume this whole thing,
It's mandatory.
is mandatory, and they don't read the fine print. So they're not really consuming a product. Yeah, it's like when you're buying an iPhone, you check the features. They're just paying. What is that? Yeah. So one of the key risks we're looking at is the distribution network being able to communicate. So broken telephone comes from the guys designing the products, going to the marketing team, which goes to the distribution network. Remember, a lot of insurance is distributed by brokers and agents, and bank insurance in the banks. So by the time that filters down to the consumer, it gets lost in translation. So one of the things the insurance sector is hoping is the digital disruption. Once it comes in, that should enable the consumers to actually have real-time access to information.
Right.
Yeah.
I don't think so.
Yeah.
Because I think it's like I've said before, the government, it's what do I call it? Not mentality. It's an attitude issue. The attitude, all those years, 50 years going on to 60 years, the insurance industry, with all the money that it makes, could have fine-tuned this distribution system. It hasn't.
Yes, that's true.
You have developed a product at the back, in the back room. You have rolled it out, and there's marketing, there's the printing of the material, then there is using those agents and brokers to go and sell.
Yeah.
Do the agents and brokers understand the product? That's not the point, according to the attitude of the insurer.
Yeah.
I want product out, I want money in.
Yeah.
And when consumers start coming back with feedback, over the years, the insurer should have noticed feedback I'm getting is showing that in fact, the insurer has noticed, because that's what you're saying, that there's a breakdown somewhere in the communication of what we are selling.
Yeah.
Improve it. We haven't seen any improvement. As I'm saying, it doesn't matter the channel. Whether you're using a human being, whether you're using tech, if the mindset of the insurer is develop product, sell it, bring money, we're never going to move.
Actually, just to answer what the statement you've made, it's true that there's an issue, okay? But the answer to that is that there's fragmentation of the market. So when a market is fragmented, it's very hard to implement what you're saying. Because on one hand, assume this market has 60 players, 60 insurers. Imagine this market of 60 players, you as the only player start saying, you know what, before you sell my product, you have to go to this classroom and learn these things. And the guy says, you know what, I have 59 other options who are not forcing me to go into some classroom. So that's where the risk is. And because of that fragmentation, that change is not coming in. So you're seeing larger players trying to come up with their own agents who they train. Yeah, so but you see, at the end of the day, the consumer doesn't know the difference between insurer A and insurer B. In fact, most consumers don't know who's the largest insurer. So that creates that issue. So I would say it's a fragmentation issue. But where the market is going, the regulator is actually very strong on this. They have just come up with a new law for micro insurance. They reduce capital. For you to set up an insurance company, you require 600 million. Now for micro insurance, they're saying you only need 50 million to open up shop. And the hope is that these new guys will come in and essentially insure the risk and train the guys and actually sell the product. Then now the large insurers can be left with more of the larger risks, people understand, what is being covered.
Okay. Looking at the uptake of insurance in the country at the moment, across board, clearly the most popular right now is motor vehicle insurance.
Actually, it's not.
Is it?
Actually, the if you look at general insurance, last year insurance collected 130 billion. Of that, a third went to medical, it's about 44 billion. A third went to motor, and a third went to the others.
Okay, so medical insurance, is that uptake on an individual level, or is that uptake because you work in an
So
organization?
corporates take up about 75 to 80%
Okay.
of our money. Retail is still low
Okay.
at about 20%.
So individuals who are taking up insurance, then could you then say the most popular as on an individual level is motor insurance?
Yes, true.
Okay. Now, and for most people taking it because it is something that they
It's mandatory.
ought to do. It's mandatory.
Yes.
So are we then seeing a movement, or will we see
Yeah.
a movement then of the uptake of insurance because you realize the risks that are present,
Yeah.
and then you take up this insurance, whether it's life, education, etc., to then buffer your life?
Yeah, okay. Remember, we have to understand the market first, so that I answer your question. You as Ndu, when you sit there, you know with guarantee that if you're sick and or you're bereaved, and you put out forms to your friends here in the office and say, okay, I'm bereaved, and Eric goes with a form and says, help.
Let's contribute.
People will contribute.
Yeah.
So the social fabric is still strong to support you. Yeah. So you see, you have alternatives. So when you're hit with a catastrophe, there's a buffer for you. But the moment those buffers end, and the society becomes more stringent. I don't know if you've seen with COVID, where when COVID started and these contributions, people were contributing large amounts. Then over time, those WhatsApp groups became too many. So think of insurance as one big chama where you don't know each other. Okay, and that's really the message that should go to the market, is that I'm in a big chama, we don't know each other, and the idea is that if I get hit, we put all this cash in a big pool. If you get hit, I take cash out. But see, now communicating that to the consumer, who has an alternative on social protection, or who doesn't trust they'll get money out. What I mean by that is they feel they'll put cash in the pool, but
They'll never be a
Getting
beneficiary.
the
but getting money
out.
out of the pool now becomes an issue.
I don't know, they're sending an investigator. Continue anyway.
So new methods can be developed. Let me give you a simple model that can be sorted for motor, for example.
Yeah.
In medical, it's something called capitation. Capitation is where hospitals are given the money. Instead of you giving the money to the insurer, then the insurer waits for you to be sick, and then they give the hospital the money. In medical, there's a structure called capitation where they actually give the hospitals the money straight up and tell them, okay, nobody's sick, here's our money. There are these 10,000 people here, treat them when they get sick.
Yeah.
If such a structure maybe goes to motor, where you get a bunch of garages and then you give them the cash up front and say, regardless of whether somebody has an accident or not, here's the cash. Somebody, and you insure, and guys subscribe, example, and then guys goes to the garages at that point. Then the insurers now will come to the back of those garages and insure if that money runs out. Those are other models which work. But remember, we've inherited our model from the day the Insurance Act was built, and then somebody came in with all these requirements.
Right.
Before you do X, do Y, investigate. Some of these things are in law, right?
Yeah.
So until those things are restructured, the current methodology of fixing your car requires you to go to the police, get an investigator, get somebody
Because
to
the law
assess.
law demands it.
They're set in law.
Okay. How big is the cake in the insurance sector in Kenya?
As I said, it's about 200 billion to 200 and something.
200 billion.
Yeah.
Would you say that the insurance sector in the country is significantly influential when it comes to policy and the policy direction?
I would say
Okay.
yes.
So if they wanted to,
Yeah.
they could launch an advocacy campaign
Yeah.
and have all these things that are considered bottlenecks
But
removed.
yes. The question is
Yes.
is that are the new models tested yet? So if it's not
Are
broken,
they-
don't
okay.
fix it.
Are they testing the models?
Yeah, you need an incentive to test the model.
That's where I'm coming back to. Attitude problem.
Okay.
And I'm justifying this by saying, look, the law has told you that any vehicle on the road will give you money.
Yes.
Okay?
Yeah.
By law. So you're sitting back there, as long as there's a Meli that has arrived in Mombasa, that is money. You know, clear. The law has also told you that any factory operating, there will be insurance for the workers.
Yeah.
The law has told you. Sit back. Don't even go.
You don't even have
they
to
will
sweat.
come.
Yeah. Actually, from workers, it's not a lot of money. Workmen compensation is about 6B. So, yeah.
6B. But still.
Yeah.
The law has also, not the law, but practice is also showing you, insurance best practices offer, incentives to your workers. One of the incentives is medical.
Yeah.
Sit back, money is coming. That is why when you look at general, 30% motor, 30% medical, a huge chunk of it is coming from just the corporate. Sit back.
Yes.
Attitude. There's no incentive at all for Kenya's insurance sector to even think outside the box.
Well, also remember, the consumer also needs to purchase his products. And, it's partnership with people like yourselves, because there has to be that conversation. Because remember, as I mentioned earlier, the consumer has alternative risk sharing options.
Yes.
Okay? Somebody will say, let me not buy home insurance for, for theft. Let me keep that cash and get my own self-insurance options.
Some way
to do it. Because remember, it's all about indemnity. Paying you back, restoring you to where you are.
Yep.
But the consumer feels like they can do it themselves, or they are not really willing to pick up that issue. But now there's a second aspect to it, to the sector. Insurance is actually one of the few services in the world where you give them a shilling and you expect 100 shillings from them. If you go buy your phone or if you go buy bread, you give them you give the value of the product for the same. So because of that aspect of you give them a shilling and you get back 100, now there is what we call moral hazard. People tend to game the system. And that is now where a lot of restrictions, protections, assess, investigate,
to make sure
that
reduce fraud as much as possible.
There's not just fraud. There's also what we call moral hazard, where people know, as a consumer, you'll always know more about yourself and your risks than a third party. And that's where the issue is that because of that exposure, the people tend to shy away from being, coming up with all these exciting products. But things are changing. We're seeing a lot of foreign players coming with capital who can take a gamble, and we do expect in future that somebody will take a gamble and change the system.
Are there some big gambles that you've seen in other markets?
Yes, we've seen, like for example, the company called Lemonade. We saw they took a gamble and said, "Why can't we pay a claim in 90 seconds?" And they took a gamble on it.
Where?
I think in Europe, but see, some of these people get seed funding,
Right.
Yeah, somebody comes, they get 1 billion shillings.
But once they've reviewed,
able to take a risk with it.
Yeah.
Once they've reviewed and looked at, so we said we're going to be able to settle claims within 90 minutes.
90 seconds.
90 seconds.
Yeah.
Looking back, is it working? Is it denting their books? As in, are they being played? Is their system getting gamed?
You see, remember when you get investors who have given you cash as a startup and they don't really care, in terms of
Investor
what they're looking at is outcomes. They're saying, have we sold X? The outputs are not losses. That's why we saw Uber running losses for many years. The focus is how many guys have taken up the product. What's a new way of doing things.
Yeah.
So lucky for us, the regulator in Kenya, IRA, they are coming up with a sandbox. And the idea of a sandbox is break the Insurance Act, break it. That's the idea of a sandbox. And now we are seeing people like FSD Africa coming in to support those guys, to get funding. So maybe in the next 3 to 5 years, maybe now some such fundings will come in. And we call them insurtechs, and those guys will be able to hopefully get funding. Somebody take a gamble who focuses on the outcomes and not the money, and then things will change. Obviously.
Okay, so as we are looking at things then that are being developed, right, that would then give incentive to the market to then pick up on insurance, what are some of the things that are currently being developed that will say, you know what, folks, you actually have to, that whole community charmer that you were talking about, realizing that is actually important for you to take it up?
Yeah.
What are some of the things then that are being developed in the market that would then say, all right, folks realize the importance of this and they're taking up some of these products?
Okay, I think for us, people are trying to just address components of the process. Nobody right now is doing the whole journey. People are doing components. There's a friend of mine who's doing something on telematics, which is trying to talk about usage-based insurance. So let's say you only drive your car once a month. Can you pay a fraction of the insurance cost, usage-based? Yeah? If you're a better driver, you drive faster than others. There's a product by Heritage.
safer driver.
But those are components of
Okay.
it. Even at Kenbright, we've launched a product on the M-Pesa app which just addresses the issue of viewing prices and buying online, on the M-Pesa
So you
app.
can compare.
Yeah, that's for comparison.
Okay.
So various people are doing components of the headache, in terms of there's a company called Solvit. They're trying to see whether they can get a guy to come to your office and value your car.
Right.
So people are doing components of that. There's a company called Pula. They're doing something on agriculture. On the paying farmers on time quickly. Okay, but right now, the capital in the market to sort out the whole process is not yet there. However, the little capital people have, they're able to sort out processes of the process. Yeah.
But
Do you find-
Macharia, this capital is all coming from external sources.
Yeah.
The current players, especially the current big players, how much are they invested in these things that we're talking about?
Current big players investing in those big things, they're very selective. So I'd put it that way. Yeah.
Attitude. It's all about insurance penetration and product development in the insurance sector in the country with Ezekiel Macharia, MD and Chief Actuary at Kenbright. As we're going to the break, we were telling us about the many innovations that you're seeing coming into the market. What is the uptake of those innovations? Do these new inventors, let's just call them that, do they need to convince the market so much to take their product, or is there so much awareness?
Thank you very much for that. So remember, as I mentioned, the inventors that are coming in are inventing part of the process. So they're not really in touch with the consumer. So they are inventing, I'll give the example for the Solvit guys who are trying to do valuations at your doorstep.
Yeah.
Those ones, you not see them at the sale, but they will be part of the process. You see the guys on telematics, you only see them after the sale. So most guys are coming in, within the process to sort out the issue.
And their client is the
insurance market.
Okay.
Yeah, for us, for example, we just launched a product on M-Pesa app. And the uptake has been good, but for us, for you to check the code. So if you go on M-Pesa app right now, you can click on car insurance and you can just see the prices per insurer. The uptake there is good, but remember, people also don't want to buy online. They tend to just go back to their normal ways of doing things.
Why?
So also there's an inertia with the consumer. The consumer wants to do things the way they used to do them in the past.
Why?
Because you would have asked the question, if we had put, for example, for us, if we had put, buying the product, because now the sticker, it comes on your email or WhatsApp.
Yeah.
Why are people not doing it? It's just that people are just so used to, these
Traditional ways of doing
this. So there's an inertia also on the consumer side because, as you mentioned earlier, there's lethargy on both sides, both on the consumer and the industry in terms of, changing. And that frustrates the newcomers because they try to do things the new way, they don't succeed as much, and then the guys who are doing things the old way continue thriving. So then there's lethargy back. So the new guys withdraw back to the old ways. So maybe you have a role to play as SpiceFM to see how you can support this conversation.
Or maybe just continuation of what the people like yourselves are doing will lead there. Like we're talking about the banking sector. I mean, so there's the formal financial sector, banks, and then there was a Shylock.
Yeah.
And the Shylock evolved.
Yeah.
And now not being
To digital loan.
you know, the Shylock has evolved into very many other things. You are able to access your money more easily without necessarily having to get your gas cylinder from your kitchen to go and take to the Shylock. But it's easier. Also, people in how they save and they want to access Chama, the normal, women table banking has also evolved. We have seen a proliferation of SACCOs. It's because of that. It's because of people understanding their savings culture and what they get out of it and seeing the value for it. Microfinance as well, but insurance stuck in the same. So I think if you if you continue doing what you're doing with a lot more awareness, with the focus on just creating awareness and showing the need. C.T. Muge always says that people will do something if they can see the benefit.
The issue here, we have a market that has a mandatory aspect and or dominance. And when you have a mandatory aspects to your product, legal mandate, then there's a bit of lethargy, okay? Because as you said, there's a guaranteed sale, for example. Let me give you an example that had monopoly in such a perspective, like the cable industry. People used to set up these, special channels. They took time. By the time they woke up, Netflix had come and taken over.
Moved on.
You get?
Yep.
But you see now the insurance sector also has that monopoly from that perspective. And now the disruptors right now are having challenges entering the space. What can help, I keep mentioning, is capital. You cannot disrupt financial sector without capital. So if we see new players coming in, as I said, we saw Equity Bank just set up a new company, Equity Life. So if they've been able to succeed on the banking side, maybe they can look at the insurance side. But there has to be a disruptor and new ways of doing things. We are seeing NHF will be mandatory shortly, which means they'll now have money to fund the hospitals and come up with new models of treatment. As I gave the example of paying the hospitals up front, as a new method of funding. So the ecosystem will evolve, but I keep mentioning the mandatory nature of the business creates that lethargy, and which means some people will succeed without spending more.
Okay.
And what that does to your profit and loss? It makes you more profitable because we're seeing the same product. You're just spending more money
on it
to do the same thing.
Trying to sell it.
So spending all this money on R&D. So that is where I would say the requirement is, to boost the business.
What is the uptake of a product that is not mandatory in terms of percentages in the country?
Let's go to general insurance. General insurance, as I gave the example, last year, as per the regulator's results, was 130 billion money in that year. Of that, I give the example, it's a third. Medical a third, 45 billion. Motor a third, 44 billion, and then others. Others is your fire industrial, your fire domestic. So the others, that the last third, that is optional. Motor has, as I said, has a mandatory aspects, the third party, but people end up buying comprehensive. If you of the 44 billion that Motor did, if you just deduct the mandatory aspect, it's not a lot. It's about 10 billion. Okay, so 10 billion is mandatory, but that 10 billion has grown the 30 to make it 40.
Okay.
On medical, medical is a bit tricky because the private side, the corporate side of it, the retail side of it is 20%. It's a fifth, and the 4/5 is corporate business. Now, corporate business, it's mandatory in the aspect that the employer is required to take care of their health cost. But nobody told the employer to buy insurance. But so they just transfer it to the insurers. So if you say those are semi-mandatory, so the pure non-mandatory general insurance is about a third of the business. Okay. Then now, if you add the other components of motor, it can go to 50%. Life, most of it is optional. And that goes that's another the whole, it's about 70-80 billion. So if you combine general and life, we're talking about 70%, which is voluntary.
And do we see trends? And I'll tell you why I'm asking. Do we see trends in the uptake? I remember there was some time, maybe 10 or 5 years ago, everybody was taking up an education policy. And I say everybody, of course, being very careful, because a lot of people who were taking up an education policy so that later on you could, you were able to fund your children's fees later. In this time of that COVID has happened, where there are a lot more hospitalizations, unfortunately deaths, families had to take care of their loved ones when they were out of work. We've seen a lot more people, just from conversations that we've had, taking up this insurance so that it can, help you out later. So based on what's happening in the economy at the time, socially or otherwise, do you then see that people are taking up the non-mandatory based on what is happening at the time?
Yeah, obviously you'll see an uptick, and it's a very simple reason, and it's one of the reasons I mentioned earlier. You as an individual, if you're faced by a catastrophe, you have your backup system. As I said, you have your work office friends, you have your family and friends, people at home. You see now, because of COVID and the depression it has brought about, your family and friends are not as willing to fund your catastrophe as they would earlier. So that's why you're seeing more people go into the insurance space. Because as I mentioned, insurance is one big charmer, right? So you're seeing people move into that space. The only thing I can caution people to do is just read the wording. An insurance policy is not like, a loaf of bread and you say, okay, this one is bigger than the other one. No. A policy, we can both have policies worth 30,000 shillings, but mine is very different from yours. Maybe mine protects me more from flooding than lightning, for example. And yours is just flat. So there has to be an understanding of what's happening. For example, most people don't know this, but if you hit somebody on the road, the maximum the insurance can pay you is 3 million bob. Okay? But you can ask them to pay more. To pay the guy who was hit. Remember, that guy has to sue you first.
Okay.
And then they pay. But you can also enhance it to more than 3 million. So in case you hit a group of people on the road and the total bill per person is 10 million. You see, you'll be sued in court, you'll be told to pay 10M. The insurer will sort you out up to 3. Then you take care of the 7, it's up to you.
Yeah.
It's up to you. Remember, they've sued you. So you have to go and say, you know what, enhance my third-party liability benefit. So that's the thing, is that people need to understand when you're pricing a product, let's say a product is 30K, it's made up of components of maybe 5K, 6K, 7K, that each component has its own risk factor. If you view how business is written, is that they all go to their various pools. There's a pool for hitting people, there's a pool for repairing cars, there's a pool for legal issues, there's a pool for hospital issues, pool for deaths. So your insurance policy is actually a bundling. And you're actually saying, how much from this pool can I take? Can I take 3 million shillings or 10 million shillings? You may not know this, but the consumer assumes, since you have a policy that paid 10 million, mine should also pay 10 million.
Sure, yes.
But see, that's not the case. And that's really where the disconnect comes, and that's where consumers feel that they've been shortchanged. But essentially, it's a product understanding issue.
Yeah. So
Consumers
the
have
shortchanging
been
essentially
shortchanged.
could lead to then
Apathy.
future apathy, right?
Yeah,
To
it's
say,
apathy.
okay, well, I'm not going to go into that mess again. I'm not going to bother. Let me just keep my money under my mattress, and if something happens, then I can deal with it later, right? So what kind of disruption then needs to take place so that folks are, number one, comprehending this thing fully, no matter what it is that you're taking up, and then you are actually selecting products that will help you in the future, and understanding that it actually is a good thing. I don't think there's any insurance or in business today that believes that whatever they're offering is just some run-of-the-mill product. They probably do believe in the product that they're offering, right?
Yep.
So what kind of disruption needs to take place so that there's uptake of these very good things and people are not going to feel that they're being shortchanged on historical experience?
The answer to this is a very difficult answer, and the answer is peer-to-peer insurance, which is really a hybrid of. You see the guy who buys third-party insurance only, and then puts money in the bank in case his car is hit. He'll take money from his own bank.
Yes.
Yeah.
And the guy who pays comprehensive, who pays a lot up front and has no money in the bank and hopes if I get hit, these guys will pay.
Yeah.
A peer-to-peer is the middle, where you put cash in a pool as peers, and then you check each other. So if you have peer-to-peer, essentially, I'll be the one telling you, hey, this thing is only 10 million or only 3 million. Make sure it's resolved. Now, the problem with peer-to-peer, consumers have to be aggregated into a pool that can create that structure. You see, remember, it's all about you give $100, you give $1, you give a shilling, you get back 100. You get. So you have to create a pool, a large enough pool. And numbers we've seen, we need about 50,000 lives to activate some of these projects. So I would say peer-to-peer is the answer to this. That's the real disruption, because everybody now insures each other.
It's basically a circle.
It's basically a circle with an insurance guaranteeing the circle.
So the structure is already there.
It's actually really there.
Because it's a circle, and people already understand, I am putting money here, I shall come and borrow 3 times my savings.
Yeah.
And it's because we are many.
Yeah.
So, are you
there.
advising?
It's peer-to-peer. That's the answer.
So, are you advising insurance companies right now to develop or come up with a product that would establish this?
You see, now the issue here is that when you create such structures, you destroy the current structure.
But is that not what you want to do? Disrupt.
Disruptions should be gentle.
And it should also be
It
external.
should be painless.
Gentle
You cannot
disruption.
disrupt from inside.
Gentle disruption. What we want a child to be born without pain.
Oh.
Yeah, that's what gentle disruption is. So I think it's just up to the market to wait for that day. But it is happening. You're seeing people like first of all, the infrastructure to do it. The payment infrastructure is there, M-Pesa is there.
Yeah.
And mobile money is there.
Yep.
The smartphones and the digital platforms are there.
Yes.
The consumers are aggregated already in the Chama format.
Yes. It's a product that's lacking.
We just need the regulator to approve, then it's over.
Did we have to get the regulator approval first before we got before we got mobile lending working? Now we are getting them under the regulator, but it's because they're already taken off.
Financial sector has to be regulated because you'll have a lot of rogue players who will come in and take all that cash and run away with it. You know, people have been in there in the pyramid schemes. So regulation is very critical for it to work. I think from where we're sitting, where the area that will flourish, and you'll hear it a lot, is life insurance. General insurance, you can do peer-to-peer, but life insurance is where you want to put cash in a big dam, or if you want to do post-retirement, you fund a hospital. You know, you come in as a group of 1,000 people who don't know each other. You put cash for post-retirement medical, where you'll be treated when you're old. And what you do, essentially, somebody should take that cash, buy a hospital, build one. So by the time you are 60, you go to the hospital for free. You see, instead of the kind of structure which is, let's take your money, put it in bonds, and then when you're at 60, a Panadol is $1 million bob, and then it wipes your fund, right?
Yeah.
So those infrastructural requirements are required on the asset side to make sure that things move. Now that's the real disruption. Yeah.
You know, listening to you, I'm actually getting a bit encouraged that there's gonna be a disruption in this very archaic sector called insurance in this country, where you'll go in, you'll walk to an insurance to go buy insurance like you walk into Subway.
Yeah.
You decide, okay, so I want this bun. I want you to put this, this.
Hold on.
You
chili,
decide what you
add
want,
some-
and
yeah.
you understand it. You can see what you're buying, what you're getting. By the time you're sitting down, you know you chose the thing that you're eating.
Yeah. And actually
Today we don't have that. I don't know. You're the one who's telling me about. I have a comprehensive car insurance, because the law says have insurance. So I thought comprehensive also covers me. Then I get to see IRA doing adverts on the TV, and they're saying that with your comprehensive car insurance,
You insure yourself.
you're not insured. I'm thinking, so why am I? So
Actually, let me explain the issue here.
I need to get to a point where I just tick the boxes. I want
Exactly.
myself covered. Yes. Am
How
I
much am I
covering a
supposed to
third
pay?
party? Yes.
Yes.
Am I covering the? Yes. This one says that if you hit someone, it's up to 3 million shillings. Take 3 million package, 3 million package, 3 like that.
Yeah, so actually that is possible. So as an actuary, I can make that happen. The problem is administrating that thing. Okay? The issue, and that's why you're seeing insurance, what they do is they come, we say, okay, we want to target 20K. What can fit in 20K? So you remove a bit of those things. It's like your Subway burger. You remove some of the salami, you remove some, and then you just say, here's the bun.
We can slather on some
So
mayo,
here's
but
some
that's
bun.
those most
This
you'll
is a-
get.
This is a bun with no mayo. So because why? Because I'm being targeted to give a price, you get, or a rate, 4%, 3.5%, But actually, you can actually buy a product for 7% that has all the nicest things in the world. But see, now the consumer has to understand that actually you're actually ticking what is driving the price is actually what you're putting
boxes
on
that you've
your Subway
your-
burger, what you're really putting on the sandwich. Do you want some bacon or not? That should be how it works. But see, right now, they just want a box.
They've come up with this is our markets can afford
Yeah.
this worth this much.
Yeah.
So create, remove, and then sell the market that.
Yeah.
The market has moved to a point where everything now is about me making a choice. I choose what I want to watch, and that's why Netflix works. Because I sit there and you're not telling me it's 9 o'clock, watch
You
the
must
news.
watch
I'm
this.
like, get out. I want to watch a series. That's where the market is. And with this disruption, with everything that you've said, we have a payment platform that works. We've got a digital platforms that work. We've got an audience that already understands
And has appetite.
and already knows how to use digital. We'll get there where there's a minimum, and now you add-ons.
Yeah. So actually, if you think about it, your motor has a minimum of 7,500, which is your third party, which is really, if you hit somebody on the road or you hit somebody's property, there's some coverage. But everything above that can actually be structured like a pick and choose solution. But it starts with platforms, and even for us, that's why we're trying to come up with a platform where people can pick and choose. But even for us, we're having difficulty. We're still putting the rates as is, like 4%, 3.5%. The idea is to make the consumer reach a point where they can actually spend 20 minutes or 10 minutes to pick and choose what they want. Okay, maybe I'm giving you, flood cover, or I'm giving you fire or theft, and you don't have that exposure for yourself.
Right.
You see, or somebody who hits people on the road, and he is being sued for all these kinds of money. The consumer does not know this.
Yeah.
And the issue is that they assume it's also complex. It's also another thing. If you buy your laptop, it might look complex, but you need to go in and understand Excel, but you do it.
Yeah.
But if I tell you the same document, understand it, you're like, no. First of all, what is excess? What is loss of use? I don't want to hear.
Those too many words.
You've already exited, yet you're intelligent enough to understand more
yes.
complex things. So, as I said, there's also apathy on both sides. And hopefully, when this infrastructure comes in to support, and for me, I think where the remaining piece is regulation to support these new inventors. And as I mentioned, regulators come in with a new, the IRA is coming with a new sandbox.
Right.
And as I mentioned, sandbox means break the Insurance Act. That's what it simply means. Come up with a solution that breaks the Insurance Act. And when that comes in, we hope that the consumers will take up. Because you see, imagine somebody invents, does all those things, and then Eric still says, no, let me just go back to my car agent to give me my car.
If it makes sense,
You see what you
people
do,
will take up.
you disincentivize innovation
The
also.
innovation,
Right.
yes.
You see?
Yes.
So there's also inertia on the consumer side. So that has to be recognized when you talk about disruption in the insurance sector. Not in Kenya, but even in Africa.
It's a global thing. But I think if it makes sense, people will take it. Whatever makes sense.
But there's a mind lock to the consumer.
If you're coming to sell me the algorithm that makes Excel work,
Yeah.
I will shut down. If you're just coming to tell me, enter here on row 1 and enter this one on column 2, and it will do a summation, that's it.
Select.
The problem is you're coming to tell me, you see now, this is how the algorithm works.
Yeah.
I will be like, okay.
Next.
Let me give you an example. Right now, as Kenbright, we have a product for car insurance. Right now. The people are listening. On the road, they can go on the M-Pesa app and click on car insurance and check the car insurance. But are they doing it? No. It's there.
Click to validate your car insurance.
No, just click to see prices.
Okay.
We have the whole market there.
Okay.
They're not doing it. I think for me, the issue is that the consumer
aware?
already...
Are they aware? Is there adequate communication to let them know that this thing exists?
It's on the M-Pesa app. If you have an M-Pesa app, you know all the things that are there.
No, I don't.
Not necessarily. Necessarily.
There are very
Some
many
people-
things on this
M-Pesa
M-Pesa app.
Send money.
I go to send money to
Lipa
buy
na
airtime.
M-Pesa.
Lipa na
Have you
M-Pesa.
clicked on Discover?
How many
Why-
people know
yeah,
there's a
why?
discover button?
There's a
You see
Discover
what I'm
button.
saying?
I
It's
did
there.
not know that.
So you see, so all those guys have downloaded it. You see, even you have not. So you see, the guys are disrupting, but there's no uptake.
Yeah,
and that's
tell
what the issue
Safaricom-
is.
Tell
The
Safaricom
disruption
to come and
must
tell
come-
me
but
to
think
click
about
the
it like
Discover
this,
thing.
Ezekiel.
Yeah.
The disruption must come with adequate, if not superfluous, communication. Absolutely necessary.
Where is Discover?
You
Send
see,
money,
can't you-
withdraw cash, buy airtime, loans and savings, Lipa na M-Pesa my account. Or do I need to be on
There's
the app?
M-Pesa app.
Oh, on the app.
On the app.
M-Pesa app.
Yeah, I refuse
You
to do
are
that.
not even in the
I
atmosphere.
refuse to
Okay,
go to the app.
So anyway, so what I'm saying is this. You see, at the end of the day, if you're a disruptor, one of the things you have to do is put the disruption
Yep.
in aggregators.
Yes.
You know, like M-Pesa. Kenya Power, hopefully one day we can put an aggregator there where, let me give you an example. Instead of buying home insurance, it's part of your bill. Where
Right.
if your
Brilliant.
house is burnt down, since you have KPLC, you should have it insured.
Right.
But see, the issue here we have is that consumers feel like any money going into insurance is not going to come back.
It's because
So
of
until
the-
that is resolved,
that mindset, yeah. If we all just see insurance as working and this thing that works for me, it's gonna work. Anyway, Ezekiel, thank you very
Thank
much
you
for
very
joining
much.
us.
Asante sana.
Ezekiel Macharia is the MD and Chief Actuary at Kenbright. He's been telling us about insurance and their journey that's going to disrupt the insurance sector. I can't wait for that day. Cannot wait.
It's
Because
coming.
They say they definitely, it needs to happen tomorrow.
It's coming.
These people have just been sitting here.
This is the Situation Room, the only way to start your day.